Hey guys, we just finished navigating the fog of investing in here now. I don't have my dog here, so those of you that really like my dog, he was like way more popular than me in the last video. What I love about navigating the fog of investing is it just talks about so much of what we try to do as investors in the investment industry, trying to get us to move money around and how dysfunctional it actually is. But one of the biggest reasons that we like to move money around is we like to feel like we have control, and we're scared, quite frankly. I mean, when you have weird things happen, people get scared. Done a couple interviews, and I took lots of notes. When I do these interviews, I'll write stuff down that I've been thinking about. I thought I'd do a video just talking about some of the things that I was learning as I was doing research regarding market conditions recently. A lot of this stuff due to China, right? With the trade war and tariffs and all of the things going on. The media has been really good at scaring people and getting them all worked up over the fact that we're in this kind of a war and it's going to be really bad for the US and blah, blah, blah. What they haven't been talking about necessarily is how kind of bad it is for China in so many ways, and how what a big risk that they're actually taking. I was actually looking at the amount of foreign reserves that China has, like $3 trillion of foreign reserves. And why does that matter? Well, one of the things they've been talking about is China is a currency manipulator. Well, what on earth does that mean? Well, typically you have a floating currency, and that is where it's kind of like your house. It goes up and down in value, and if I want to sell it, I have to drop the price low enough to where somebody will buy it. And I've got to get a price that I'm willing to accept for it too if I'm selling it. So or stock. Stock trades for whatever somebody's willing to pay for it. Now, what's going on with their currency is they've always been able to mess around with their reserves in order to change the value of their currency. And hence, that's kind of what they've been accused of doing. If they drop their currency, the value, it makes their exports cheaper. So that's one of the things that they're fighting about. And they can weaken their yuan to make to offset some of these tariffs that we're actually imposing upon them is really the issue. I thought it was interesting, the yuan. Remember a few years ago they were talking about that they're going to make the yuan the reserve currency and it was going to overtake the dollar. Well, that's all but pretty much died because of these very things. So it seems like we're always worried about something different at any point in time. It's kind of funny that way. But the yuan is only 2% of all cross-border transactions. That was something I learned as I was doing some research on that. They're not very much used in cross-border transactions whatsoever. What we find is, I was actually looking at one of the things I was looking at was how the media tends to attract our attention and get us to watch their programming. And one of the things that we find is that if the news is negative, people will tune in. If it's positive, people won't tune in. So always remember that the media is going to exaggerate the negatives whenever we're talking about what's going on in the stock market. And another thing I was looking at is, people were asking about, well, China, why is it such a big deal? It's a macro event. And what that means in English is that sometimes you'll have things that happen economically that affect everybody, every country, all around, different types of companies, different sizes of companies. And this whole thing with China has been a macro event. In other words, it's affecting a lot of different people. Why? Because it's the two biggest countries and economies in the world going at it with each other. Well, I did some research about the economic growth in China because the growth has been very, very rapid compared to the U.S. And so, why are they doing so much better economically from a growth standpoint? Well, it's not nearly what we might think it is, because if you look at the level of population in China, they have like 1.3 billion residents, followed by 1.19 billion residents in India. The United States, we're a distant third with 311 million. Nothing to sneeze at, but they have way more population. They have way further to go to catch up to us. And if you look at China and go, are they really doing that great? If they're the second largest economy, but they are so much bigger than us in terms of population, I would submit no, it's not quite as great as people make it out to be. Reminds me of the early 70s when there were even economists that believed that Russia was going to overtake the United States. It didn't come anywhere close to happening. So a lot of times we get a lot of stuff overblown. I like what Warren Buffett said. He says, I'm no good at predicting markets. He says, I have no idea what's going to happen tomorrow, next week. He says sometimes they get very volatile like this, the markets do. He was talking about how volatile stock markets can get, and he says, sometimes they just put you to sleep. But the important thing is where they're going to be 5 to 10 years from now. He says, I'm confident that they'll be considerably higher in 10 years. He says, I really have no idea where they're going to be in 10 days or even 10 months. So if one of the best investors in the world has no idea where things are going, we're probably not going to figure it out either. And he says, but he says he doesn't try to predict the market. His favorite period of holding for stocks is forever, which I think is a pretty good way to look at things. And realize that your treasury bills actually during these market volatility spikes and downturns, treasury bills have actually come up. So anybody that's near retirement has a significant amount of money in bonds that are very safe. And that's what we want to do during those periods of time, because you never know when some kind of an agreement will come through just like that and cause markets to spike up significantly. Because once the risk goes away, once we have a reduction in risk, then what happens is all the investors that currently hold stocks will say, I'm not going to let go of the stock at this price that I bought it at. I'm going to require a much, much higher price out of you if you want to buy it off of me. And that's just the way the markets work. That's why you can't predict them. And everybody is in it for their own self-best interest. People that own it want to get paid properly for it when they sell it. People that want to buy it and want to buy it for the cheapest price. But in reality is there's going to be a fair trade on either side. Supply and demand rules, and that's the way economics has always worked. So hope this clears up some of the stuff going on. I kind of rambled, but that's what I do. We'll catch you next time.